Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show where we look at what happened in the market during the day and how we can plan for a better trade for the next day, right? And we had a V-shaped, price action-based market moves that happened today, right? There was big selling pressure at every time it was, tried to move. That's exactly what happened. So let's get into and see what exactly happened. So as usual, the pre-market analysis for May 25th, Wednesday, tomorrow, 2022, one day ahead of the monthly expiry, would be based on all these parameters that you see in there, and we'll do some data analysis, we'll get the global views, and also we'll wrap up with some actionables, right? So this is a candle on the daily time frames on both the indices, and what you see here is clear bearishness. A bearish Nifty candle is what you say, wide range clear, bearish candle, which so selling pressure is what you see. So you can see that there is a gap resistance. It has been hitting that place multiple times. Even yesterday it was a bull trap which hit the same gap area, and today it fell into the bearish pressure and then closed much below, right? It attempted to move up differently. But the Nifty, there is some strength is there, right? Although the formation is again, inverted hammer with a long wick size, indicating that there is selling pressure on the banking index as well. So it's more or less nothing much has happened except some points are lost in the Nifty, and the selling pressure continues. So it was very volatile today. Right? Intraday price action, if you see, this is exactly what happened. Right, you have one V shape and then another V shape. It's almost a W shape move that has happened, right? So very choppy V shape and inverted V shapes and V shapes again. So it was very difficult day for the intraday traders, especially no matter what they do, unless you do some scalping for a 2 or 3 minutes on a 2 or 3 minute candle, right? Otherwise, there was nothing. It was very, 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 very challenging to trade in such scenarios intraday. At least even the swing also doesn't help, because it goes like overall W-shaped moves, even in a swing scenario as well. So let's get to what exactly happened. So it is more or less flat. Banknifty just 42 points lost, 42 points gained actually, right? And Nifty lost 0.5%, right? There was pretty good loss, considering that yesterday also did a loss. So it's a bearish candle, yeah, at very crucial supports, as we had been telling since yesterday, day before also. So inverted ham. So we have seen all of these points. Intraday price action is like multiple V shapes, all within 200 point and a 500 point, and in the indices each of that, right? Policy bands are showing bearishness. Definitely, it's down sliding volatility expansion that is happening. We also discussed that yeah, so that's exactly, so there's not much change. Let's look at the levels and see. The support is at 15 850, 950, 960 retracement level, which was which actually got reached. It maintained the level above that. Just one sec, yeah. So that's before that we have a support at 16,100 and 16,200. That's the first support. If that breaks, we go to the 15,850 to 16,950, 961. If that breaks, 15,500 to 15,650, 15,650, which is a previous swing low. And then if that breaks, then 15,350 to 450, and then 15,000 kind of levels. Similarly, upside resistance will be 16,350 to 16,450, which will match 50 retracement level. Then you have the gap resistance, and if that 16,550 zone is reached, then you can charge it at 16,700 to 750, and then above that 16,800 to 6,900, which is a Fibonacci 38, and having 17,000 above that, right? Rounding number. That's the support resistance on the Nifty. In the Banknifty, similar to the right side charts, if you see, the supports would be at 33,500 to 34,100, so that's 61, and then that breaks, it goes to 32,400, 32,800, and then 31,800 to 32,150, which is the previous swing low, major swing low. So 33,000 also is a major. It's a small swing that has happened, and that's a very crucial support zone. If that breaches only, it goes to next target will be 32,150, and then below that you have 31,000 kind of levels if that breaches. Similarly on the Banknifty, the swing low, so 15,735 is the interim swing low that is created. If that breaches, then you have to look at 15,650. That are the two levels on the downside, right? Upside would be this clearing of this major resistance on the upside is what you have to target it. That's coming at 35,000 above levels on the Bank Nifty, and then 16,650 above levels on the Nifty. That may not happen in a single day, but that would be the place that I have to look out primarily on the upside. Bank Nifty, we have already seen the levels we have seen on the upside. I think we are not seeing. The resistance would be 34,350, 34,750, and then we have 35,000, 35,300. That Fibonacci 50 retracement levels on the upside. That's a gap resistance also. If that is clear, then 35,800, 900, that's on, and then 30. That is 36,300 at 36,800 Fibonacci 38, and then you have another gap that is clicking clearly at 37,500 upside. That's the resistance levels and the support levels of Bank Nifty and Nifty. Moving on to the momentum, the momentum is actually it's you can see that it is sideways. It was in the bearish zones, it managed to climb, and now probably it is trying to take a support of the RSI 40 here, both of them. So if that happens, it's good. It can take a reach the support, takes the support, and momentum support I'm talking about, not price support, and then again bounce up from that. It's possible. So as of now, the sideways momentum on the medium term as well as in the daily time frame, short term, right? That's what you see. Sideways momentum overall. Trend still not about to cross over the bullish zones in the short term. So bearish zones on medium term and short term, both on both the indices actually. It is about to cross over. It's a brim edge of the crossing over, right? In the Nifty, you can see that it almost came to crossing and then took a turn down. But overall, the strength of the bearishness is fallen, taken a bend here and it's falling down. The green one, the green line is bent and then falling down, means the bearishness is reducing on the short term, right? But it's not the case. It's the green line in the weekly charts is rising. It's not there in this screen, but just for information, right? So the trend overall is at the brim of a crossover to short-term basis, but overall, as of now, it is bearish only. The trend already has spiked up today, 9.5%, 10%, and it's about 25. Right from the beginning of the day, that's a kind of 25.6 is where the level is. 25 was the area where now it is dominating throughout the VIX. So VIX, there is some kind of uncertainty in the market that is prevailing. Implied volatility is 22.73, and maybe implied volatility percentage for the 52-week level is 89. So also on the top, and VIX is about 25 minutes. Obviously, you have to either stay out of the market or be very, very, very cautious until it cools off further down. Now, intraday open interest analysis is very interesting today. So, right, Nifty was trading far below where the option writers had written for the monthly expiry. Right, it was falling, and then open interest was there much ahead, strike prices. So when this open interest was going to 1600 levels, 16,200 and 250 had a lot of put writing already there. So that kind of move was actually happening. So it was something. It was very evident that the down move or the up move, whatever was happening during the intraday, the V-shape moves are not going to sustain. That was clear from the OI analysis intraday. But for tomorrow, the options analysis for the Wednesday, one day ahead of the May 26th, Thursday, day after tomorrow's expiry. One day ahead of that Wednesday, the levels of 16,000 and 70,000, 1,000 point range of where the maximum put and call writing is seen. Between 500 and 16,500 is where the second level of support and resistance is seen as per the open interest of the options. Now, Bank Nifty, the 34,000 and 35,000 is where the highest put and call writing is there. 33,000 and 34,000 is the second level of highest put and call writing. Second highest put of call writing is put writing and call writing is seen, where the support resistance can be seen. Put call ratio is closer to the bullishness than the bearishness, 0.83 on Nifty and 0.92. So futures open interest short build up, Bank Nifty showing long build up. So Bank Nifty showing more strength as per the open interest of the futures, and also as per the put call ratio. Also Bank Nifty is showing strength. The price action also shows that it closed green today, even though the selling pressure was there in the prop. So you can see that a lot of call write up has happened today, and call build up has happened, and put build up has happened on the Bank Nifty. That also shows that the Bank Nifty is showing a lot of strength, right? So make note of these levels and try to trade for the next day. Map them to the support resistances we had seen from the charts, and mark the points where you enter and exit. The Looking at the heat map, you can see that there is some greenery there. Lands have done well. HDFC Twins have done well. Might did not do well. Yesterday it was doing somewhat okay. Kodak Bank was performing. So overall, if you say sector-wise, if you say only auto is performing, others are all kind of still in the red zones. Coming to the index heavyweight, HDFC Twins are showing some greenery today, but remember it has slipped from major resistance also and trying to climb back, and momentum is just trying to hang on the sideways momentum zones. And Reliance is gaining the momentum from the sideways. It is trying to climb back into the bullish zones from where it had slipped down. But remember that it had taken a very good neckline support of the breakout zone and then moving up steadily. It's trying, so it's kind of bullish, heading towards bullish at least after the initial breakout. There is retraced a bit. Infosys did not again another red day, unable to climb due to the US markets probably, so unable to climb back into these sideways zones, remains in the bearish momentum zones. And remember there is a major gap zone there, and it has given up a major support zone, and things are not looking good. Same with the case of TCS also. It has given up this support zone and trying to climb back. TCS, I can't fully see the charts. Let me just quickly go there and then have a look at the TCS story. Yeah, so it's the same story. It is a red day. It is unable to climb back after it has slipped from the major support zone and the edge of slipping from a support trend line channel as well. ICICI Bank is showing greenery. It has climbed back into the sideways zones on the bullish zones. Momentum is about to cross over. The trend is about to cross over. So overall, the thing is that there is a resistance from where it had slipped back. So that may be a hurdle before it clears and climbs back in there. You cannot say anything. But the star is Kodak. It seems to be, it seems to have managed to climb into the bullish zones today on the short term. It was steadily performing last many days for some reason. Contrary to all the other banks like HDFC, this was a performing thing. There are a lot of green candles you can see overall. It is facing tough resistance in the middle line area where you are seeing. Now we have the resistance zone above that you can see from where it had slipped down. So that would be the close watch. But yeah, it's turned bullish on the short term. So probably the only bank that has turned bullish in the short term from the momentum perspective. It has gained a lot of momentum. So Kodak Bank and Reliance is performing against others are all struggling. Industry sector wise performance, if you see, it's a mixed day, mostly down day, right? 82% again down, further bearishness. There's a bullish momentum divergence which does not seem to work, right? It's unable to climb back into the sideways zone. So metal is down 1.2%, pharma is down 1.5%, FMCG 1.3%, realty 1.3%, all down. So now we have three sectors in bearish zones: IT bearish, metal bearish, and realty bearish, right? Auto, pharma, and FMCG are managing to be in the sideways. So sectorial approach of getting into this, picking up the stocks from the top-down approach of pick best performing stocks in the best sector is right now not possible on the long side at least, right? Institutional participation is a concern. There is no stop to the selling of the Fyers side, and although the DAs are buying, growing concern, and today's data is not coming. I will check that tomorrow morning how it is, but most likely it will have been a good sell. Yes, it has come in 24th May. Fyers have sold 2,400 crores in the cash market, and the DAs have managed to buy 1950 crores in the cash market. So that's a kind of thing that is happening since several months. Fyers are selling, and doing nothing else, right? Yeah, so institutional participation continues to be a worry point, and let's move ahead and see the dollar and the currency pair. Right, USD currency pair is showing that there is some consolidation. There is it's a red days, and then some after it made a no all-time high. There is a halt of the movement that has happened basically, but rupee is weakened to the core. How much more it will weaken? So almost 77.89 kind of levels, right? And dollar index, if you see, there is some retracement downside that is happening, and it continues today also. Dollar is weakened, so it may have some impact on the rupee not further rising up, but not directly correlated, right? So rupee is continues to weaken. There is some cool off that has happened, but it's at very low, weakened position right now, rupee, which is a concern. Global indices, you can see some bounce up has happened on the Dow Jones, the US index, and it's trying to climb back in the sideways on the momentum, but that doesn't look really attractive in the Nasdaq, right? It's struggling to maintain after it has slipped on the major support zone. Same as the S&P 500, also on the edge of a parallel channel, and then after it has slipped, is trying to climb back in the sideways also. Just managed to climb back, but Nasdaq is doing really bad. So around 30% of correction that has already happened. The IT index is following that, despite the dollar gaining strength. It doesn't help the IT, and IT is falling equal as 30% correction that has happened on the Nasdaq. So as long as the US markets continue to fall like this, there is nothing that no markets can do. No matter what TAs are buying, the Fyers continue to sell because they're shifting their money for better interest in their home country. So inflation, Fed rates, so all interrelated, and that's exactly what is happening. So US markets, the latest thing, the price would be available only tomorrow morning. So the next day, we'll have to check whether the US markets have performed or not. Our markets also would have a pre-market opening in the depending on that. If it is a big move that has happened, right? If it is not a significant move that has happened to the US, flat or not big moves, then we don't have to follow that. Right? If big moves happen, definitely that will affect our market. Crude oil is also showing green up move above 100. It slipped slightly from 110, so 110, 109 kind of levels, no change from there. Although the momentum has not climbed in the bullish, it's remained sideways. It's kind of consolidating, but consolidating at a very high level, not ready to even go down below the 100 for any chance. Gold is rising up the last several days, 3-4 days. It has picked up the momentum and rising, and it's in sideways zone. Remember, it had a big retracement that happened after 2 attempted failures to break out to the all-time highs. So it's trying to climb back to the support zone from where it had slipped down. Momentum is in the sideways now from the various zones. To 2 long trades for tomorrow. Ashok Leyland is beautiful weekly, cup and handle formation breakout with a gap up is what you see there. It is at the neckline and closed above that, so it indicates that it can move up and give good swing trades. Coromandel International is also a long trade. It is breaking out from all-time high levels, and you can look at the Fibonacci, extensions tools to look at the levels. 1110 and 1100 are the levels that it can go up to. Looks like a very good breakout, and momentum is bullish, trend is bullish. Right, so 2 bullish long trades: Coromandel International and Ashok Leyland. Lotus sector is also doing okay. Right, so it's a breakout that's happening both. So wrap up, cautious mild bullishness is what I have based on the chart patterns that we have studied, the support resistance levels that we have seen, the different indicators of the momentum and the trend indicators, and the Bollinger Bands volatility and all of this. Right, so mild. It's a mistake that is repeating today as well. Actually, right? This is not bearish. This is cautious mild bullishness. The headline is correct, but what is written here is wrong. Let me correct it right away. Cautious bullish. So that's what it is, right? So reasons we are already seen. So having said that, there is a mild bullish bias is there. There is always a possibility that the market can make another swing low. Right? It can crack the support zone that we are thinking at 15,650, and then it can crack that and then can go down. Right? That is a possible still. You cannot roll out because overall it's bearish trend. It has not recovered. The trend does not change yet, but there is a high probability, that it could make some more up move before it makes another swing low or something, right? Swing high or something, right? So as of now, few days of consolidation, or because it has corrected a lot. It has made a very very good correction of nearly 20% of 7. So that's decent enough correction that has happened now. US market is also a very crucial point where it is deciding whether it is to go into the deep bearishness, or is it done with that correction and then consolidate and slowly move up. That's the kind of move that you can see right now. Same will reflect in our market also. We are corrected well. Now from here, if you slip down, it can go deep down. So very cautious. There are a lot of global cues which are not that positive, right? So you can make a note of that. That's why you have the uncertainty, and the India VIX is reflecting 25. Very high US inflation, historic, and then Fed interest rate hikes in our markets and in our central bank and US central bank. So if I are selling aggressively, no matter what happens in the market, so crude prices increasing up, and rupee is weakening to the core, dollar is striking. So all this and war is still happening in Russia and all this. So a lot of negative news is floating around. So it will be highly volatile as it used to be. Intraday also it's volatile, and even swing also it's volatile. So heavy volatility, choppiness is what is happening, right? 2 days in a week it moves up, and 2 days it falls down, and another one day it moves down. So it goes. So but overall, if you look, the trend is down. That is evident. You may get it in turning bullish move. So look at the support resistance level. So as long as 17,500 and 37,500 on the indices is cracked, there's no doubt that we are probably done with it. Done with the down move for short term, right? Similarly, 15,650 and 32,100 is breach, means we have a long down move that can be expected. So that's all we know. Breaking of these levels is what we know. We cannot predict the market. Markets can be very random, but we have the levels where there is high probability that market can stop or breach or do whatever it wants, right? So that levels is where we have to decide on the risk management and then play the game, right? That's how it is. The positive factor is that there is a lot of strength in the market. The DA has managed to buy even at these levels. As retailers are confident, they're flowing in the money. The Indian retail money is flowing in. That's why DA is able to continuously buy despite FIs pulling out their money. So VIX is greater than 25 means obviously you stay out of the trade if you're not a professional, especially in the trading. So, and this is right, a very good opportunity to buy in SIP mode. Very good quality stocks, especially IT stocks are all beaten down. So you can get a very good quality, high quality valuation, and then you can gain when the market bounces upside. And also, if you have long positions and if you want to sustain this correction period, then you have to hedge it by option strategies or gold or some other investment strategies has to be adopted so that you don't sell and lose and then get out, right? If your quality stocks are corrected substantially, that's how we have to cover the losses, right? So the main thing is, if you're carrying forward intraday, if you're carrying for overnight positions are carried forward, means never do that without hedge position, because you never know what event happens in the night and then you can wipe out the capital for the next day. So all of the views, cautious mild bullishness, and that's my view for a very short period for tomorrow. Right? It may change day after tomorrow. It may not work and it can go further bearish down. All these possibilities are there, but overall, that's my view based on all the study that you had done. You could study all this and come out with another view. That's your call, right? But, if this study that we have done on the momentum, trend, levels, volatility, all of this, if that has helped you to some extent to have a view before you trade for the next day, then consider hitting a like button and share to maximum. If you're not subscribed, subscribe right away and then share it to all, because we have very few subscriptions. I appreciate your help in this regard. Thanks a lot for watching. Happy trading, happy learning. Bye.